Hello traders, welcome to this special video about the law of cause and effect and the Elliott wave theory. This is a powerful video that is going to change your life forever. It's going to explain the difference between the gambler and the professional trader in terms of decision-making process. So let's start. Let me ask you something before we start. Do you know if you are a gambler or if you are trading in the professional way? Do you know how to identify if you are a gambler or not? Well, today we're going to resolve that question, and you are going to notice if you are a gambler or if you are a professional trader. And I would like you to leave the comment here on YouTube and also to subscribe to our channel, but leave your comment sharing your story if you are trading as gambling or if you are trading in the professional way, because this makes a huge difference. The majority of traders imagine what is going to happen in the future. So let's make an analogy, a simple analogy, crystal clear analogy, so you have a clear understanding of this point. Stay with me because this is going to change your trading forever. So let's make a simple analogy here to make this point. Let's suppose that there is a rock traveling in space. Space is void, so the rock is not having any resistance, and it can travel for thousands of years in one direction. There is a guy watching from Earth through his lens, a special lens, through his telescope, the rock. And let's suppose that there is a website where you can gamble if the space rocks are going to change their behavior, their direction. So this guy says, you know what? I think that rock is going to change, is going to turn around. I'm going to put $100 here on the table. $100 for the rock, for this rock changing the direction. So this is a gamble because the guy is guessing, is thinking that something in the future is going to happen. So this guy is a time traveler. This guy is a crystal ball trader. He's the guy who imagines what is happening next. And of course, that's impossible, so it's a gamble. What is likely to happen is that the rock keeps moving in that direction. So this guy is a loser, right? He is losing his money. He's out, his account is done. Now, let's suppose that eventually another rock is traveling in the same trajectory as the rock that we are watching. So we start making, there is guy number 2, the professional trader, let's say, or the professional analyst, let's say, because we're not talking about trading here. So he says, oh, look, there is another rock that is traveling in that direction, and with a 70% chance is going to hit the rock. Okay, cool. But I'm going to wait till the cause happens. And when the guy sees that the rock is hitting the other rock, plus the rock starts turning, that's the effect. That's the first part of the effect. The guy says, you know what? Here I'm going to put $100 that this rock is going to come here to this level. Because I'm not guessing, I'm not gambling, I'm seeing the cause and I'm seeing the start of the effect. You see the difference? Now, the majority of traders are losing money, right? And one of the main causes of losing money in the markets is not waiting for a cause. It's trading because you believe that the trend is going to switch from bearish to bullish, because you are seeing this indicator or you are seeing another indicator that is telling so, or because the news are coming, or because this expert on the TV show that I like on the mornings was telling that the market was going to turn around. That's absolutely crazy. One of the most powerful techniques to understand the costs being built by the big banks is the Elliott wave theory. The Elliott wave theory, traders, is a powerful technique that help us to find the proper costs and the expected effect when we start seeing it. So let me show you a specific case here, and then we will make an exercise with an indicator, so you will see how crazy is trading with an indicator in that manner that most traders use it. So this is our report of January the 17th, and that day here we post these daily reports every day for our clients in the membership. So you can see that we were waiting for the 3-4-5 sequence to find the end of our wave 2 and to start seeing the effect of price coming back to the previous high. So as we can see in this process, we were here that morning and we got the 3, the 4, and the 5 sequence, but that's not enough. That's still analysis. Be careful. Do you think it's a good idea buying here? Nope. It's a terrible idea, because this could be deeper, but we have the wave count, and here we have the construction of the cause. So it's like the rock is moving in this direction, and you're starting to see the effect happening. It's changing the direction. This process, traders, is called accumulation, and it's also coming from the smart money concepts. You can learn all the details with us in the membership. So once that happens, you are free to buy here, or even better, to buy here, because we have a high probability that the rock now is going to start moving in the upward direction, thanks to the wave count and the law of cause and effect. We are not gambling. We are seeing demand building. We are seeing the demand building something interesting, a bullish move. And the best part is that we can trade it with a minimum risk and huge potential of gains. Now let's make an exercise of the trader that likes to use an indicator. So we can start here and let's add the MACD. So one of the most popular MACD setups is to trade when you have divergence. So here you have some divergence, the price makes the high, and you sell it, and you leave the protective stop loss above the high, and that's it. You have a loss because you are gambling. Here is no effort. Here is not cost. And the price continues. So wait, here we have another one, another divergence, right? So you sell it here again, and you leave the protective stop loss above the high, and guess what? You are out, another loser, right? So you do it again, and you lose again. And you continue doing so, and you sell it, and you lose again. So are you familiar to this happening to your trading? That you start selling because you see an indicator of the MACD, or the RSI, or the stochastics, or the magic indicator that you just bought online for $10 that is called the magic stars, and is going to show you the end of the trend? Of course not. You're going to continue losing your money all the way up. And eventually you can grab a better setup. Eventually you can have a leg down, but at the end, if you are not fast enough with your risk management, it's going to take you out again at the highs. And you are going to continue to that process losing a lot of money, not because you are using the MACD, because this could be on any indicator, right? It's because you are not trading professionally. You are gambling, my friend. You can add Elliott wave here and it will be the same, right? If you don't understand the process of cause and effect. This is a game changer. So never in your life trade because you believe that something is going to happen, because the indicator is telling, or because your best friend is telling, or because the expert on the TV is telling. No, don't do that, my friend. That's gonna make you lose a lot of money. You have to trade because something real is happening. And when you really understand this point, and when you really start applying the law of cause and effect in your trading is going to change forever. And it doesn't matter the time frame that you are trading. It doesn't matter the instrument that you are trading. If you like to trade the ES, the futures, or the CL, or the Bitcoin, or the euro dollar, or the dollar yen, or whatever you like to trade, is going to work for you, because this is going to be universal for price action. This is one of the skills that you really need to develop in order to be successful. And once you have the cause and you're starting to see the effect, that's where you can start applying your technique to trigger the trade. But of course, you need this first step in advance in order to make it. On Elliott Wave Street, we can teach you how to do this, and your trading is going to change forever. Just with this little class, your trade is going to change forever, because from now on, you need to promise that you are not going to continue trading based on hope or thinking that this is going to happen in the future. Nope, on the forecast. That's a huge mistake. You need to start trading because things are happening, because the real thing is happening. And when you understand this concept and you start applying it in your trading change forever. And you're going to start being profitable in your trading, and you're going to be apart from the majority of traders that are losing their money all the time. These, combined with good trading psychology and good money management, you are going to make it. And that's the process that we offer on Elliott Wave Street, with real examples every day, live market analysis, applying all these techniques. So here on ElliottWaveStreet.com, under the membership tab, you can sign up, and you will get immediate access to this fantastic world of analysis, education, our new Discord server where you can chat with other members and you can share your good trades, your bad trades, and everything. And you will get immediate access. So visit us on ElliottWaveStreet.com/membership, and you can start immediately getting these courses and the market analysis and everything. Traders, thank you very much for watching this video. Don't forget to subscribe, also to share in the comments what you think about the law of cause and effect, and what do you think is important, and if you have been trading based on hope or if you have been trading professionally. Have a fantastic rest of your day. I'll see you soon. Take care. Bye-bye.